Wall Street has just placed some of the largest transactions they have ever done. We've seen the biggest options expiration of all time, and of course, Iran has just been struck by the US. So, what exactly do we need to be looking at in the sea of chaos that is this weekend? In today's video, we break down the tweezer pattern, a very rare S&P 500 occurrence, and of course, we take a look at the resistance and volatility, which is set to spike on Monday. What does Wall Street have in store for us? Well, we'll go through where the smart money lies right now, including stocks, commodities, and cryptos. Guys, this one's not to be missed. There's so much happening. Let's get into it right now together. Well, welcome back everybody to The Daily Show. This is our special weekend edition. My name's Tom, and today we're covering the big macro, the data, and the key flows, including what is smart money up to right now, and why have we not seen a chart happen since the 2000s that's occurring right now here in 2025? What does it mean for all of us? Well, let's kick things off here with the breaking news, which is obviously the US successfully attacking 3 nuclear sites in Iran and possibly kicking off all sorts of further escalation. We don't know how that one's going to play out, but we do know that Wall Street weekend futures were down as much as 1.5% at one point. And basically, we are seeing a bit of a risk-off event here occur in the markets. Now, we've talked a lot about this and how sometimes the markets will pick up, but do remember if markets end up closing below some key levels we're looking at in today's video, they tend to move towards the next level of what we call equilibrium. And that could be a little bit lower as we head into this weekend, very neutral. And as you can see here, Fear and Greed Index is basically flatlining at this very important key technical zone. So what exactly is going on right now? Well, according to the latest data here from Todd Sohn, we see defensive sectors at their 35-year lows. So you might be thinking with all of the chaos going on in 2025 that maybe markets would be a little bit more defensive. Well, the key answer here is no, they are not. In fact, defensives versus things like the aggressive technology stocks are at their lowest point that we haven't actually seen here yet since the 2000s. And if that sounds familiar, this was the beginning of course, the dot-com boom, and now we are in the beginning of course, the AI boom. So very big similarities there when you want to draw it. And clearly, people are still willing to take risk on. And as you'll see later on today's video, it may be that Wall Street pulled the trigger, though, on taking a bit of that risk off on Friday. Maybe they knew something that we didn't heading into this weekend. Bullish Brent bets also rising by the most since October, straight into that Friday move. And you can see here, hedge funds added to long bets as Iran and Israel traded blows over the last kind of week and a half. And we have now seen probably what we'll consider a big spike here on the Monday session. Now, a lot of traders are always enticed to go and trade and try to get into these things. Just remember that oftentimes with oil, you'll see a spike and then you'll see actually a drop straight after that as things de-escalate quickly. But these are the previous spikes and the initial move percentages for oil. And as you guys know, this is kind of what happened even only a week and a half ago, where we saw a spike up, a drop, and then we've seen it now go back near those highs. And of course, there's a zone just above where we currently closed on Friday that seems to be a very heavy supply that we may be hitting. So the next question will become, will Iran now close the Strait of Hormuz before July? Now, of course, Polymarket seems to be the place that everyone goes to try to figure out these odds. And that has moved to around this kind of period here, which is 35 to 40% chance. Now, we have already shared a chart before in our previous videos. If you haven't seen those, make sure to subscribe, guys, and click that bell icon, as you'll need to be updated with the market moving forward in 2025. I don't think it's going to get any simpler really out there. But one of the things that we saw was that most of the Iranian oil was going to basically China. And of course, the US wasn't going to be as affected by those closures or any of those things. So first up, before you think that, it's unlikely to affect the US as much. It's obviously going to affect China more in terms of where the oil goes. Now, one of the big reports here, which you're probably familiar with by now, has been the Pentagon Pizza Report, which basically tracks the local pizza joints to the Pentagon. And just like clockwork, I guess, in this case, we saw high activities being reported to the closest Papa John's to the Pentagon. And basically, this was a classic indicator for potential overtime. And, just a few minutes later, maybe half an hour to an hour later, we got the news of what has occurred. Now, in terms of whether this is normal to see markets sell off during this time, well, yes, in some ways it is. We were talking about how the June period often does see the second half become weaker, and the July period generally funds start to buy back into. So, as you may be aware, sometimes you'll see these types of things occur and the markets will just go up anyway, and you might be left scratching your head saying, how does that work? Well, we've shared that chart before. Generally speaking, when major things have kicked off, we've often seen markets dip initially and then be bought back up. That also makes some sense to where we are in terms of the time of the year. Second half of June generally is weak. First half of July is generally incredibly strong. And you can see here, according to the Almanac Trader, this is the type of way it plays out. Often you get a bit of a decline here, then you get a huge rally into July. And even though there's going to be a lot of fear around, remember, if markets do break through certain key levels, they do go through option zones, and that can start to have a flow-on effect as well, what we call the squeeze event, and that would be a positive gamma squeeze if that did occur. In terms of where valuations are cheap, where valuations are expensive, you can see here that financials quite high at 71. You'll see there's a big trade on those, by the way. Real estate, certainly quite weak. Healthcare weak, energy pretty weak in the middling zone. That did start to get some movement into it. And of course, the big one here is information tech. So according to Mike Zaccardi over here, and I think it's CompuStat and FactSet, we basically got here one of the most expensive markets in terms of information tech and consumer discretionary and industrials. So it makes sense. There's the growth areas of the US market. They've been pretty high as everyone has piled into particularly small caps in recent times with lever. Now, that seems to be where retail is trading the most. Remember, we just saw options expiration, the biggest ever during the triple or quadruple witching event, which is where all of the options expire kind of at the same time and you get these massive amounts. And we saw 6.5 trillion come off equities over the Friday session. This was off a shorter week too, because of course Thursday was a public holiday in the US. Now we need to see rebalancing of new hedge positions being opened. And this actually opens up big movements on Monday because as we expected in our previous video, we thought Friday would be volatile and it certainly was. It was up, it was down, it was up, it was down, and it ended up kind of a little bit up. But Monday could be even bigger now with not only the news, but also people being under hedged and therefore maybe all sorts of weird options starting to come through. So where have people been hiding this year? Well, they've been hiding in three main assets: Bitcoin, gold, and silver. And you might think, well, wait a second, shouldn't people be borrowing or hiding in the dollar? Well, as you'll see soon, no, the dollar hasn't been the traditional hedge. Now, it's been the world's biggest hedge for a long time, but gold, you can see here, central banks continue to purchase throughout 2025. We've shared heaps of charts on that, but it is now the best returner this year, Bitcoin second best, and people actually moving into the emerging markets. And we've seen a lot of movement out of the US dollar recently this year into emerging markets, into some of the other markets, including Europe. And basically, it's been like a world where we've seen a bit of switch. People have said, oh, maybe the US is not exceptionalism anymore, and we're going to go start, finding those other areas. I always say, where are the best innovative companies? And to me, the answer is still the US. So the US is still the best market in the world, in my opinion. But of course, there are times in cycles where you want to own different things. Now, I would caution people before you go to emerging markets, these are notoriously dangerous. So if you get them wrong, you can get stuck in them for a long time. So just remember, it's not as simple as buying the US and having usually a supportive government and Federal Reserve that start to, kind of get that market going and pushing up. Emerging markets, if you have a story, let us know. But let's say you were in the wrong one at the wrong time. You can sometimes get stuck in those ones for like 10 years if you're a holding investor. So we mentioned before that the US dollar traditionally usually does see a spike around these geopolitical uncertainty periods. Well, the US dollar is now incredibly short. So when does it become too short? Well, this is the same thing that happened in 2018. We saw the US dollar massively short down to these extreme numbers, and actually the dollar started to improve. Now, if you've been watching our channel for this year, you would know that I've been really weak on the dollar this year, but I am open to it. I know I've mentioned just over the last week that still I'm to the downside, still I'm to that 95.5, 96 kind of ratio here when it comes to the US dollar index. But that being said, you've got to be open to the fact that the US dollar could squeeze at any period of time. And the main reason is because it is heavily shorted. And now more people are short it then long it across the board. And that's been very different to where we were at the start of the year. And most people expected US exceptionalism and US dollar exceptionalism. So as we often say, technology is going to take us higher. If it's leading, good things are happening, and the market in general is quite bullish. Well, that's what we've seen so far off this pickup. And I think we need to keep it in mind if we do end up seeing a dip. As long as technology is leading the rallies, generally the market is not that bearish. And right now we've been in kind of hyper growth stocks, and we've been seeing the beginning of small caps across the board start to improve. Now we have got a couple of big transactions. Let's talk about them. This is the old one here, the big Russell trade that came in on the Wednesday close session. Two of the largest trades we've seen. If you actually put them together, you would get the biggest trade ever recorded, I believe, on the Russell in terms of they came in right near the close there. Since then, of course, we've dropped a little bit on the Russell. I would say through the Monday session we will anyway, but too early to tell on that one. But we did get a couple of other large trades. This is another old one before we go to the new ones. Google. Now, Google got the 28th largest trade it's had for a while. And then we got news that Turkey was investigating. And of course, they've sold off about 3.5%. Now, Google, by all metrics, is actually quite cheap on paper. Like fundamentally, it looks quite cheap. But again, price action is everything. So if it keeps coming down, especially into these areas here in the 155s, there could be some pretty nice bidding down there. And I would think that may be where Google goes to next. Maybe it goes 155 before it goes up. Now, another thing that just happened that was really strange on Friday, and we mentioned at the start of today's video, was we just saw a large trade in financials. Now, it's been 21 months since we've seen a dark pool this large. So this has to mean something. This is a massive dark pool transaction in financials, and this is a huge deal. So it's coming in right near these peaks up here, and it's kind of showing us that maybe this is a little bit more of a sell-off or something's going on. I would doubt that's a buy, but what do you think in the comments down below? VIX, 2 times long levered VIX, massive trades coming in as well, right near the end there, June 17th, June 18th, monster trades coming through, and now possibly, these ones often come in early, by the way, and now possibly a spike through Monday. Will they close? Will they keep holding? Something we'll report back on. And then we saw Meta with the 5th largest trade we've seen in a long time, and ARK Innovation. Yes, ARK just got the largest trade ever recorded on the fund. Now, we've been actually fans of ARK over the last 2 weeks, and I've not really been a fan of it for a very long time, but we saw flows move up. I tell you what, the largest trade ever transacted through this fund just came in. Is that a sell? Is that a buy? Could it be a buy because it's going through and breaking up? Not sure yet, but there's certainly a lot of things starting to come through here on the markets. So let's take a look at the S&P 500 first up. We'll just quickly go through central bank liquidity. Central bank liquidity for both the US and the world did drop as of the latest Friday data. But I think the big one here is the S&P 500 tweezer. So let's take a look at this. This tweezer is pretty rare. And what a tweezer is basically it's 2 rejection candles that look like this, where you've got a high, you've got a low, and of course you've got an open and a close relatively close to each other. And you've seen the markets bull during that period of time. Remember, this is a weekly, so it's pretty big. And then they've been pushed back down. And you've seen that happen equally 2 times. Now, when you then get a lower low, it can sometimes form larger sells. And of course, the big key level here that most people are going to look for, at least initially, is 5,800. Now, could it be more? Well, this is all happening near those highs. Obviously, we've been talking about this being pretty neutral up here. And if you look back, it's very difficult to find rejections like this. This is 2 week rejections close together. This is 2 week, well, actually 3 week rejections really close together, leads into a bit of a sell. And then we have the one over here, which is I was going to get to, which is the kind of up, down, up, down. If it sounds familiar, this actually happened around that Russia-Ukraine stuff. So basically this was a high, then a low, then a high, then a low. And then we ended up going to a lower low and selling off further. So very, very interesting how these patterns are starting to form. And certainly the tweezer is a concern. If we have a look at the futures market, you can kind of see the clear level. 59.20 is the clear level where markets start to weaken. The market was up, down, we'll see it in a moment, but it did end up kind of rejecting a little bit there on the Friday. We're in the neutral block, so I would call this incredibly neutral. And if the markets break past 60.50, as you'll see with the options, we're probably going to an all-time high faster. But if they break down, you've got to think 5,800 is certainly exposed, if not even 5,750. Actually, we'll just go back over here to the chart and we'll have a look at the 2 hours so you can kind of get a bit of an idea. So you can see here that markets rallied up through the session, then plummeted back down, and then kind of held around that zone. So there was a big rally back up to this defended area. So in terms of smaller time frame gear, we had 60-20 acting as supply, and we really did test that. So that's going to have quite a lot of people really almost getting their stop losses taken out. Potentially this stop loss was taken out, and then we pressed back down. So if the markets do open lower, that could expose further shorting. I mean, it's not exactly the kind of bullish style pattern. I'm still bullish on the middle term because I think the thing is here that you're going into that historically bullish period of July. It does tend to kind of pick up markets, but yeah, it doesn't mean we won't drop a little bit lower. Now, what about positioning? So the S&P 500 was going through the $6.5 trillion of options expiration. Now we're seeing positioning that could blast through 5,900. Closing below that, going to expose, as we've mentioned, 5,800 in particular, and more importantly, negative gamma. So we're going to start getting into that kind of more flow-on effect of options. And you can see here, 59, 5850, 5800 being the most struck zones. And then we get the same thing here on the 24th, which is the Tuesday. And of course, we continue to see that through the week. So 5900, 5850, 5800. I would think it's 5,900 to 5,800 is kind of the main trade that a lot of people are looking at. If you're a bull though, you just want to see 5920 hold, 5,900, 5,920 hold. And if that happens and it kind of like drops under and then spikes straight back up, then we could go into a mega squeeze. Tesla's something similar. We've talked about 330 for ages. 320 started to strike up this week as a bit of a put wall. But to me anyway, I don't really think Tesla's out of the woodworks going bullish until it breaks and closes above 330. And I also don't think we've seen really enough low because we're not down and leaving like 300 or even the 280s yet. So probably in the middle of neutral land for Tesla. Nvidia, same thing, 145, 150, 145, 150. I feel like we mention it every video because we've just been sitting at the same point. But this is actually what's been occurring. We've just had the markets sitting at the exact same resistance all the time here in charts. And that just has basically meant that Nvidia hasn't been able to be free and therefore us to get an all-time high. And this is probably one of those charts you want to keep coming back to. A 150 plus breakout in Nvidia. If we aren't at an all-time high for S&P at that point, you've got to think that's a very good lead for an all-time high and to keep pushing higher. Volatility. So we do expect the VIX to spike. We did have those weird transactions that we're kind of all transacting down here just a week and a half ago kind of period. And they're so far, of course, going to be a little bit correct. We do expect some volatility spiking throughout Monday. If it holds that kind of volatility, then that's going to bring fear back into the markets. Remember, the markets are neutral. And yields, this will be an interesting one. Will we see the longer term yields spike up? We'll certainly be watching yields quite closely. We've also got what's going on with bonds. Bonds data will come in through the Monday session, so make sure to subscribe. We won't be able to tell that just yet. All we do know is that weekend Wall Street futures aren't historically that accurate, are coming in a little bit weak. But yeah, we haven't really seen that breakout just yet, so we don't know that. US dollar, this one's interesting. If I had to guess, I'd still go 96, 95, 50. The trend is still down, so we cannot ignore how the trend looks. But I certainly think you've got to be open for the squeeze to the upside. More and more and more people are weak on the dollar now. And while I still think that's the play over the medium longer term, the short term could still have a squeeze in it. So we're watching closely. No break above like a 99.40, probably still on the short end for that. Gold comes off the daily 20. Same thing we've already talked about. 34.05 plus, going to be strong for gold. For now, I'd expect gold to probably find some buyers throughout the Monday session, and we'll see how strong they are. Same thing with silver. Silver's going to be an interesting one. Came down to 35.50, came down to that daily 20, kind of found a little bit of a buyer. No small time frame action on this one yet, but I think gold will probably show the way first on this one. So key level probably to watch 36.50 here for silver if you're looking for breakouts towards the upside. That was an okay pickup there through the Friday session. Now, if we go over to oil, we've seen spike up, come down, spike up. I think the level that a lot of people are going to be looking at is about 80 a barrel. And I wouldn't be surprised, based on Wall Street really positioning pretty strongly in the Friday, that they might be looking at this as a partial TP zone. Of course, a lot of people, including some of the big banks, have now said, oh, if this keeps escalating, we're going to go to 130 a barrel or whatever. I don't back that in until you start to really see those flow movements. So for now, I could see it spike, but be very careful in oil. I think it's a very dangerous trade if you don't know what you're doing. Tesla, neutral, 330 plus, obviously closure. Going to probably push 350, 360 narrative. We're looking for 280, 300s on the more buy side. Nvidia's at resistance. We know this. Is it going to turn over? It certainly could. And Google was the big loser here on Friday with that Turkey news. And obviously it fell off. Now, where's it going to get good again? Probably about 155 if it doesn't get that low. And just remember, there are a lot of government risks on Google. Google is the government risk stock. It's why it's cheap, and it has been for a while. It keeps getting kind of attacked by different governments around the world. So this one here is the government risk stock, but on paper, it looks pretty cheap considering all the stuff they've got going on. US 2K, you can see here, its position kind of around that most traded zone. Very large transactions have come through here. We're watching for the trades. We're not sure yet on that one. And NASDAQ's the same thing, very neutral. So as we mentioned last week, we're still in the neutral area. We did reject through Friday, which opened up further shorting. So if you did that, I guess I can make sense of it. And then if we do hold and close below, then 21K, 20,900 probably is where you're going to start to see support. It's around the daily 50, and that's similar to 5,800 on the S&P. Now in crypto world, we saw Ethereum actually bust low. Now, I was talking about this as possibility to bust up based on all of the transactions. So I guess you can't really deny this does look like a Wyckoff distribution. So what that usually is a buyer's climax, UT, UTAD, and it opens up the possibility here that Ethereum might move back down to 1900. Now, I'm not sure how bearish I am on it from that perspective. Of course, if it instantly wipes that and comes back up really strong, then you'd have to reverse the position. But yeah, to me, I guess it only can be looked at as bearish, with rallies currently looking like they're being shorted. But the Bitcoin trade hasn't done the same thing. We actually haven't taken out the level of 100,000 yet. So because we didn't take out 100,000, we're still trading literally around that most traded zone, which goes through all of this area here. And it doesn't show us that the main leader, like is in the S&P 500 of crypto world, is that weak just yet. So certainly interesting to see all the alts go bad, but Bitcoin's still holding strong. And if this weakens off, then you've got to expect Ethereum probably to that 1900. And Bitcoin, if it weakens off, probably 95.5. So 95.5 takes you back into this area. But for now, still holding on barely with a lower high, certainly just barely holding on. Let's move through to the week ahead in terms of news. And there is still a little bit of news. We've got Jerome Powell coming out Tuesday, 10 a.m. New York time. Then he's doing it again here, 10 a.m. on Wednesday. We got some final GDP numbers, unemployment claims, that kind of stuff, and core PCI on Friday, but core PCE. But this is really going to be a week dominated by news headlines. Obviously, what we've seen here today is another escalation on top. Well, we don't really know how it's going to play. I'm not an expert in these things, but what I would say is that in general, you're going to have to keep your emotions at the door and obviously look more at the flows, more at the technicals, more at what is the options markets actually doing and the big dark pools actually doing, because really that's how the market's going to move. And unfortunately, in these situations, we all tend to be quite emotional about these types of situations either way. And what that ends up doing is it makes you a worse trader and investor. And remember, in trading and investing, you've got to have basically no emotion. So in this case, it's going to be how are the markets moving? What are we seeing as confirmations? And of course, we'll be updating you every step of the way. Guys, I hope you're having a okay weekend. I hope you're safe and you're with your family and friends. And if you like this video, please remember to subscribe and smash that like button. Also, check us out over on X and on LinkedIn as well if you're interested in following along. And we're looking forward to seeing you in the next session, including our live show, which we do for the Monday Open. I'm sure it's going to be pretty wild. Good luck. Bye for now.